Today, May 26th, 2026, we are breaking down a powerful Nifty 24,100 CE trade signal generated by Claude AI, a setup that gave a strong momentum move and, more importantly, showed how disciplined trade management helps traders book safe profits. Let's look at the exact setup. Claude AI generated a buy signal for Nifty 24,100 CE June 2nd expiry, with 10 days to expiry, giving enough room for momentum to build. The recommended entry price was 172.70 Indian rupees. According to the analysis, this was considered an excellent entry because the option premium was still relatively cheap and positioned for a potential momentum breakout. The stop loss was clearly defined at 147.70 Indian rupees, keeping risk structured and predefined. Now, let's talk about the targets. Target 1 was 195 Indian rupees. Target 2 was 220 Indian rupees. And the final target 3 was 250 Indian rupees. The setup came with a strong risk-to-reward ratio of 1:3.09, meaning the upside potential was more than 3 times the downside risk. Claude AI also gave this trade a 70% probability score, showing strong conviction behind the setup. And here's what made this trade even stronger. The signal passed all 12 out of 12 filters. That means trend, momentum, structure, timing, and market conditions were all aligned for a bullish setup. This was not a random trade. This was a high-probability, refined setup built using disciplined analysis. Now let's see what happened after the signal. As soon as the trade triggered near 172.70 Indian rupees, momentum started building. The option premium moved sharply higher and rallied all the way to a high near 186.80 Indian rupees. The trade was moving exactly as expected and started approaching the important resistance zone near 190 Indian rupees to 195 Indian rupees. But then something important happened. The market started showing signs of rejection near the 190 Indian rupees level. Price attempted to push higher, but struggled to sustain momentum. The candles became weaker, bullish momentum slowed down, and resistance started becoming visible. Instead of getting greedy and hoping for higher targets, we followed disciplined execution. We made the decision to exit the trade near 190 Indian rupees and safely book profits. And this is where professional trading makes all the difference. Trading is not about predicting the exact top. Trading is about protecting profits when the market starts giving warning signs. From the original entry at 172.70 Indian rupees to an exit near 190 Indian rupees, this trade delivered around 17 points profit. With a lot size of 65, that equals approximately 1,105 Indian rupees profit per lot. And for traders holding 10 lots, the total book profit comes to approximately 11,050 Indian rupees. Not bad for a disciplined intraday options trade. And the biggest lesson from this trade? Not every winning trade needs to hit the final target to be considered successful. Sometimes the smartest decision is to respect price action, take safe profits, and move on to the next opportunity. Because in trading, consistency matters more than greed. Small, disciplined wins compound into long-term success.